Good afternoon, and thank you for joining us today. My name is Tim Lee. I'm a research analyst with Red Cloud Securities. I am delighted to host a Red Cloud webinar on gold and copper exploration and development today. We will hear from Scott Hicks, Vice President of Corporate Development and Communications of Lumina Gold Corp. During today's webinar, he will provide an overview and outlook. Then we will take questions. You can type your questions into the chat box at any time. We will get to as many as we can. Before we kick things off, first we need to discuss the fine print. During this Lumina Gold webinar, forward-looking statements may be made. I would direct listeners to the company's forward-looking statements disclosure outlined on page 2 of the Lumina corporate presentation that can be found on the company's website, luminagold.com. For Red Cloud Securities, Inc., I would highlight that this webinar is for information purposes only. It should not be considered a solicitation or a recommendation to buy or sell securities. We note that this call does not consider the particular situation or needs of individual investors. Participants should rely on their own investigation and seek their own professional advice before investing. Please see our most recent research located on the Red Cloud website for specific disclosures on Lumina. So we have Lumina Gold presenting today. We recently initiated coverage on Lumina Gold. The company is focused on exploration and development of its major-sized Cangrejos gold, copper, plus a little moly and silver project in Ecuador. The project features a large resource, and the company's recent drilling has demonstrated that it still has room to grow. With that, I now turn it over to Scott to update our audience on the company.
Thanks, Tim. I appreciate that, and I appreciate the report you wrote there, just initiating coverage recently, so always good to have more eyes on the story. Thanks, everyone, for joining today. Apologies that Marshall couldn't make it. He was actually in country in Ecuador, and his travel schedule just got pushed out that it didn't work to make this today, but I will do my best in his place. So I'm just going to run everyone through the story, and then we'll open it up for some Q&A. You know, I think it's obviously an interesting time for this type of deposit. It's a very large gold copper deposit. It's about 80% gold, 20% copper. Right now, we're sitting at about 17 million ounces of gold and 2.2 billion pounds of copper. We're hoping this expands a little bit with the current drilling that we're doing. We're doing about 2/3 infill drilling and 1/3 step out drilling right now as part of our current program. The PEA, I should say, that we did in 2020, it outlined a 25-year mine life, 370,000 ounces of gold production a year, and more importantly, at a very low cost. When you net off the copper byproduct here, you do get a very low cost gold deposit, sitting at about $600 an ounce all in sustaining cost. The market's changed quite a bit. So when we did the study in 2020, long-term prices were around $1,400 on gold and $275 on copper. So that was about a $1.6 billion NPV. If you stepped up to $1,680 and $330 copper, it'd be about a $2.5 billion NPV. So that's pretty close to kind of people's long-term views on the commodity. And then obviously the spot market is much higher right now. So this is, we think, the type of deposit you want in this market of increasing commodity prices. We are very positive on Ecuador. We've been working there since 2014. We think it's continuing to become a better place for mining. And some of you who might follow the Fraser Institute, they just put out a very positive view on how Ecuador has done in the last year as far as improving its appeal for mining. So I encourage people to check that out as well if they want some more information on the country. Right now, as I said, we're drilling a 30,000 meter program, and that's all going to lead into a PFS that should be out early in 2023. We expect to have the current drilling done probably in around July, August timeline this year. We're about 2/3 of the way through that program right now. So just on capital structure, we're sitting at about 375 million shares outstanding, but it's about a $230 million market cap today. Ross Beatty, who's the founder of the Lumina Group, which manages Lumina and 2 other public companies, he owns 20% of the company. And we have an Ecuadorian investor group that holds 18%. It's about five local businessmen there. And management and board holds 9%, and Route 1, a large fund out of San Francisco, holds 7%. So that's where about 55% of the stock sits. And then we did a financing, last October for to raise about 20 million Canadian that we're using for the current drill program right now. And we have about 12 million US as at the end of December there left on the balance sheet. So Ecuador, for those of you who don't follow it, it has changed a lot since we started in 2014. More importantly, I would say recently, Lundin Gold obviously completed their mine in 2019. Tongling completed Mirador in 2019. So the country is really starting to see the benefits of those mines operating, paying taxes, paying royalties. We had this government come in 2021, and President Lasso's taken a very pro mining stance as far as economic development goes. He's been engaging with all of the companies. He's been engaging with the mining chamber. So really, a different approach than previous administrations as far as the level of engagement goes. And that's been very positive. We actually signed an exploration and investment protection agreement under this government, which protected all our investment to date last year. And we'll look to sign another investment protection agreement for putting it into production once we complete the PFS in 2023. And as you can see, just from the logos that are on this page, most of the large copper players are in country. A couple of the precious metal guys are putting a foot in, and we continue to expect this to increase over time, especially as more deposits are discovered, because it is extremely underexplored as far as countries along the Andes goes. So Cangrejos, we're down in southwest Ecuador, and for viewers here, it's important to not only think about the country, but think about where in the country you are. So we are in El Oro, that stands for the gold, or means the gold. We're 40 kilometers from a deep sea port at Port of Bolivar, which is right at the top of this map here. And what's nice about that is that's where you would ship the copper concentrate out of. So we'd produce a copper con with gold in it, a high gold value, and then also some doré. Port of Bolivar is where you'd ship it out of. Whereas Mirador, the other gold copper mine that's producing right now in Ecuador, they're trucking all the way across the country to get to the same port. We're tucked back in the mountains away from the population centers here, but it's not high elevation. It's kind of 1,300 meters. And, we can draw workforces from the local area. There's an airport in Santa Rosa. Also, very importantly, we have access to hydropower here. That's important on the cost side. And obviously, from an ESG perspective, it's important to have a clean energy source for these type of large scale operations. So you can see the drilling history there on the left. We've drilled previously about, call it 60,000 meters at the project between us and other owners, starting with Newmont back in 99. And right now we're 2/3 of the way through this 30,000 meter drill program. So, the project's been being worked on for, almost 25 years now. And, we've really advanced it here in the last couple of years to de-risk it. So, where the project's sitting, it is, as Tim mentioned, a fairly massive project. It's the 37th largest gold resource in the world, just by resource size. And it's the 12th largest undeveloped project by production capacity. So, obviously not a lot of assets out there that almost produce 400,000 ounces a year on average. So that's how it's positioned. In the gold sector, this would definitely be viewed as a lower grade gold porphyry. And obviously in the copper sector, what's interesting is this would, actually be viewed as a kind of medium to higher grade of what's being discovered in the copper space these days. So we almost think about this as a copper porphyry deposit and how we approach it in mining and scale and efficiency. So if you flip that M&I grade of 0.73 on the gold into copper, we're sitting around a half a percent CuEq. And, that would be higher grade than Cobre, than Mount Milligan, and similar to Red Chris, all of which have been built recently. And for those of you who follow the country closely as well, you probably saw Solaris put out their resource yesterday, the first resource since that management team took over and started drilling. And, it's slightly larger tonnage than Cangrejos, but the grades on the total resource are actually fairly similar. Cangrejos on a CU-EQ basis is just a little bit lower than Warintza, which is interesting because that is viewed as a very attractive copper project, and certainly on a valuation perspective, they traded a much higher market cap. So I think that's interesting for people to think about when they're comparing and contrasting projects. CapEx to build this in this study, it was about $1 billion. So a little bit bigger than Fruta del Norte, a little bit smaller than Mirador, but the same quantum as the projects that have been built in country so far. And then on stage, just we'll have the PFS out early next year, and that'll really lead into the investment protection agreement and the start of the permitting process for the project. So the two pits we have right now, you can see here, we've got the main Cangrejos pit. This is where the mining starts. It's a slightly higher grade pit than Gran Bestia. Gran Bestia in the 2020 study got opened up in, call it year 8. We're infilling both of these pits to indicate it measured right now. And at Gran Bestia, what we're doing is stepping out off this northwest ridge up here. And, we think that'll potentially expand the deposit, but also more importantly, perhaps change the strip ratio. So for those of you who don't know, strip ratio is very important for these large scale operations. It really drives the operating costs and dictates that. So Cangrejos is in a very good spot right now with its current strip ratio. The combined between the two pits is 1.1 to 1. This last vertical hole you see here on the northwest side is where the block model stops. We just did a step out that I'll show you on the next slide here. And we think what that might do is help with this pit configuration when we go to update the PFS. So it's a bit small here, but you can see here on this C22-160, this is where we just put out some results. And obviously, we think this is going to extend the resource to the northwest. We're drilling another hole there shortly, and we'll see how that looks. But that's going to be important for changing this pit configuration and maybe getting it even below the 0.8 that it's already at. The other thing our recent results have done at Gran Bestia is that we do have a higher grade pocket in here at over 1 gram per ton. That breccia zone got extended during the last drill results we released there. So, this is kind of a boring point for some projects at PFS, but we still think when you're doing this infill campaign, but we still think there's some interesting upside that's happening right now that'll help improve the project overall. This is just a regional map, and this is really to point out that, Cangrejos and Gran Bestia that you see in the center of this kind of donut-shaped Z-TEM anomaly in the middle here. Although, it's a massive deposit, it is only a portion of the land package. We're seeing some very interesting results up at Valparaiso with some of the surface work we've been doing there. And as you can see by the Z-TEM anomaly and this green soil contour that goes around our two existing deposits, we do think there is other upside for drilling to continue to expand the project, perhaps find higher grade areas, etc. So, maybe we get to it or it is upside for somebody in the future. So just running through the old PEA quickly, it's as I said, $1 billion to build it. We start at 40,000 tons a day, excuse me. And then we expand in year 6 to 80,000 tons a day. Now, we get asked the question a lot about phasing, and this was how we phased it in the last study. We actually are going to look at phasing it slightly different, perhaps in this PFS coming up. So, we're looking at all the different scenarios, but, one example might be, say, 30 to 60 to 80,000 tons a day, and just kind of a more continuous ramp up and expansion versus, say, a one-stage expansion in year 6 like this. So that's one we're looking at as a way to maybe reduce upfront capital and also, optimize the project further. Production wise, after you do the expansion, you're almost 400,000 ounces a year and kicking off 50 million pounds of copper a year. The grade in the first 5 years is pretty attractive. You've got 0.14 copper and up above 0.7 gold there. On the cost side of things, at 604 AISC, there's a bunch of things driving this, but the key points are low transport costs to port. You've got cheap power, you've got cheap diesel in Ecuador, and that's for everybody there, but the country's a diesel producer, so that helps. And then obviously you've got that low strip ratio I talked about, which is so important for these big open pit deposits. So today's kind of long-term pricing at the project's about 22% IRR and about a $2.6 billion NPV. And if you think back to our market cap at $230 million Canadian, we think there's a lot of value upside for people there. So just on general recoveries and met work, and we are doing another round of met here as part of the PFS. We're trying to get these gold recoveries up right now. We're looking at a couple different methods to do that, but in the last study it was 82% on the gold, 84% on the copper. So if we could squeeze an extra couple points, that actually does make a pretty big difference to the NPV. So that's something we're working on right now. The products, as I mentioned, are going to be a copper concentrate. The nice thing about this concentrate is it's very clean, so it's good for blending. It's lower grade copper but it does have a high gold value there. So that's where it currently sits at the project. This is just the ultimate site plan, and this is going to be under evaluation in the PFS as well. But you've got the two pits right here, a primary crusher next to it. We've got a dry stack tailings facility in the PEA. We're going to look at that again in the PFS and probably put two scenarios out, one for a dry stack, one for a conventional wet tailings. We think dry stack is a better way to go. Some future operators might prefer conventional, so we're going to look at both options so that people know that both options are possible at a PFS level. The plant site itself, that's where you're going to go from 40,000 tons to 80,000 tons. That's where most of the expansion capital gets put in there in year 6. And then just on, we do get asked this a lot on surface area. So, we own about 75% of the land that's required for this site plan that you're seeing here, and we'll continue to acquire land as we go. But you're also able to get an easement from the government if you aren't able to acquire the surface land. So this is just a general timeline for the project. So, right now we're sitting at the 30,000 meters. 30,000 meters of drilling that we expect to have done in July, August. And then that'll lead to the PFS. And then you'll have overlapping periods where you work on your investment protection agreement, the feasibility study, and the construction permitting. So this, could be shovel ready approximately, 2.5 years from now for a construction decision. And then for somebody, that's about a three-year build to get it up and running. So it is a large scale project. It's a large scale construction project, but it does take a while to unlock the value for these things. So just on benchmarking, this is where we sit on projects that produce over 250,000 ounces a year. We think we're in the right part of the curve here. We're one of the few that are controlled by independents. And when you look at all the projects around us that are delivering this kind of scale, similar CapEx, there's a lot of these that are getting built now. You've got, actually, I might go to the next slide to point that out, but you've got a lot getting built. So, Solaris Norte, Magino, Cote, Hard Rock, Blackwater, those would all be pretty, Gramalote, those would be all pretty analogous projects, and most of those are under construction. So, I won't go through this page because it's a lot of numbers, but if people are curious how Cangrejos stacks up against those projects, this is all on our website. The one thing I will point out, though, when you compare it to these projects, and this is important because the number one piece of feedback we get is questions about grade. So just to show everyone that I'm not cherry picking, we are the lowest grade of this set of peers. Now, when you take the grade and adjust it for the strip ratio at those specific projects in their mine plans, you can see we actually go from being the worst in the set at 0.72 to the second best in the set. And although it's not the full picture, there's processing costs and different things, it is very important for how much material you need to move to get at the ore. And in an inflationary environment where, diesel prices and gas prices are going up and energy prices are going up, this is even more important. So I just point that out for people. And then, I think lastly, Tim, the thing I'll touch on is valuation. We obviously feel extremely undervalued here. Part of that is the ECUADOR discount to, Western jurisdictions like Canada and the US, and that makes sense. But, even when you compare us to, say, a SolGold or a Solaris or an Adventus valuation multiple, there's really no reason why Lumina should be trading at a discount to, say, a SolGold, for example. Adventus is a bit further along. They've done their construction financing. As I said, Solaris is perceived as a fantastic copper development play. So it does have and a lot of exploration upside. So it commands a premium multiple. But I'd certainly make an argument for Lumina Gold trading at least a SolGold multiple here, just for people's reference. And then the kind of last kind of cross check on that is we were at $184 million market cap in 2017. Right now, in US terms, about 211. We've quadrupled the resource since then. Gold's up 60%, and our market cap's only up 15%. So, if you think about it that way, there's really pretty unique valuation opportunity, I think. The last thing I'll touch on here for the project is community. It's pretty important. The nearest community is about 7 kilometers away. There's no communities on the deposit. And actually, a lot of our deposit areas had already previously been cleared for cattle grazing. The things we've focused on are restoring the environment in areas that we don't expect to be mining. We've planted a lot of trees, worked on restoring habitat for the local nature there. And then in the community itself, we've done a lot of education programs and sports programs in the school. We started entrepreneurship programs, especially focused on the female segment of the population, getting their businesses going. And, we've done a lot of health work in the community, especially during COVID. So we do have a good relationship with the community, and, we've been pretty well established in this area for a long time now. So maybe with that, I'll just summarize. Since 2018, we've continued to improve the project, drilled another 40,000 meters, added about 9 years to the mine life, and doubled the size of the resource from the 2018 to 2020 study. The 2020 study was a big improvement. We expect the PFS to hopefully continue to improve the project. That's going to be out early next year. And, we're excited to see how the rest of the drilling goes this year. And the last thing I'll touch on is obviously Marshall and Ross and the team here have a good track record of, developing these deposits and selling them. So that is the corporate strategy, and it's something that we hope we can execute on. So maybe with that, I'll pass it back to Tim for Q&A, and thanks everyone for listening.
Great. Thank you very much, Scott, for a very informative presentation. We'll now move to the Q&A portion of the webinar. A reminder to everyone on the line that you can type your questions into the chat box at any time. We already do have a few questions. First, given the recent drilling success, would you look to expand the current drill program to include more step-out drilling at Grand Bestia?
Yeah, sure. So what we're doing, and for people's reference, that northwest area I showed, that's up on a ridge line. So that first hole that went out 160, we're going to do a second one right now. We're going to see how that looks, and then we're going to basically design a program to bring that to a step further back. In order to use the resource in the PFS, it has to be in indicated or measured. You're not allowed to use inferred resource in a PFS. So if we're successful with that step out, we need to design some additional holes to bring that area into measured or indicated to use in the PFS. So yes, we're looking at that. We'll see how the second hole looks, and then we'll design, a program around that. And, I don't imagine that's a lot of extra cost. That's probably somewhere in the order of, $1.5 to $3 million Canadian cost for the extra drilling for that to figure out, to bring that into indicated.
Great. Is there any opportunity or benefit to further consolidating the surrounding ground at Cangrejos?
Yeah, that's a good question. There's some interesting deposits up to the north. Cornerstone's got an asset there. There's certainly some guys working around us. We think we've got more than enough to deal with in the company right now, but if things come up opportunistically, we'll take a look. But there's nothing immediately obvious that absolutely should be pursued. But in our sister company LUMINA'S, for example, we just picked up an asset that was interesting for a very good cost. So obviously we keep our eye out for those type of things where we think there's an opportunity.
Great. And what steps remain in permitting toward potential construction?
Sure. So the real gating item for us right now is having the PFS plan. That's what you would submit to the government, and that would be what you permit it basically. We've done all the baseline work up till now that we would need, and continue to do all the things that surround that. So it's really it could be as short as theory. It could be as short as 6 to 8 months, but we've kind of budgeted a 1.5 year timeline there while you're doing your investment protection agreement and working on the feasibility study.
Great. And obviously the company had spoken to some companies about potentially selling. What prevented that from happening? What feedback did you get from potential acquirers?
Yeah, for sure. That's a good question. I would say at a macro level, during COVID, I think a lot of people were hesitant to set up in a new jurisdiction where they didn't have boots on the ground. We haven't seen a lot of the large gold guys come into country yet. It'll be interesting to see when that happens. Obviously, INV got bought by Dundee, but that's kind of the only actual takeout that's happened. Newcrest owns a portion of Lundin, but hasn't consolidated that. I'm sure at some point SolGold will be on the market for an eventual takeout. So it feels like there is a lot of M&A dominoes that could happen in Ecuador, and I think once they start going, it'll accelerate. On a project specific basis, I think if I'm to be our own critic, it's still it was a bit far out for people as far as time to construction. So obviously, finishing the PFS will get it that much closer on somebody's timeline and visibility for production. People, I think, generally were very okay with the resource work we've done, and the team obviously has an excellent technical track record, so that's what you would expect. I'm just trying to think what other feedback was obviously, and then capital. There's just it's got to be somebody who can afford to spend $1 billion to build it, and we're aware that is a gating item for how many people can look at the project, and that's certainly something we will look at addressing with potentially phasing in the PFS to the extent we can get that number lower.
Okay, great. Circling back on the drilling results, obviously you had the step out or the I guess kind of step out hole to the northwest, but you also had some infill holes that encountered some of the higher grade kind of subzones within there. Can you elaborate a little bit more on kind of the higher grade potential in places within the deposits and how that could feed into the mine plan?
Sure. So, what I'm about to say is very broad, but it's always hard until you go and do the resource modeling exercise again to see where it plays out. But so I would say at Cangrejos main pit, we've seen more or less what we've expected during the infill drilling across the holes, and all these things are kind of plus minus 10%, but everything's more or less been in range so far of what we'd expect to see. At Gran Bestia, I would say similar, with the exception of that one high grade extension of the breccia zone, and that would be an increase over what we would have expected there. And then the step out would be all incremental upside as far as additional ounces to the extent that those can be brought into the mine plan, with the pit, with the new pit configuration there. So those are kind of the high level comments on how that reconciles with what we expected so far.
Great.
You never want the finance guy doing the resource modeling.
Yeah. I guess one general question, but about the PFS, what opportunities might there be for further optimization, looking from the PEA to the PFS?
Sure. So yeah, it's going to be if we can enhance the recoveries at all, because that all just directly goes to the bottom line. That's a big one. Perhaps getting the strip ratio down at Grand Bestia. If that higher grade area came in earlier in the mine life, that might help a little bit. But these are all things we got to see how it plays out. And then just incremental ounces, maybe a few more ounces in the mine plan. So those are kind of the main areas there.
Okay, great. And then obviously you had mentioned community relations, but also some of, needing to acquire surface ground. Are there any issues with access, anything like that? Or I guess what is the situation as far as access on the property?
Access is great. We put in a new road a couple years ago so that it's much faster to get to site. So, if you land at the Santa Rosa airport that's on that map in the deck there, you could be at camp in about an hour, going up the hill there to the camp. So access is good. Obviously, for production, you would have to upgrade the road and that's all built into the CapEx, but site access is good. And yeah, we haven't had any issues with that.
Great. And kind of a general comment on Ecuador. Obviously, there was a major election almost a year ago. A new president has come in and has at least seemed to be positive for the industry. Can you comment a little bit on anything that you've seen that's substantial, I guess, where that's been demonstrated?
He's done a good job about thinking about how to streamline some of the things that we're about to approach. So, consolidating ministries or processes for permits, and certainly kind of bringing in, I'd say, the key ministers early. So, Marshall, when he was down there last week, was meeting with key ministers in the government and not the president this time, but has met the president several times over the last year, and so he's done a good job of bringing everyone together to say, this is important for the country. This is something we need to do to bring in investment dollars. So, from our perspective, he's been very good. We're hoping that, we don't have obviously an election again for another couple of years here. So it would be early, I guess, 2025. But, we'd be happy at this point if he was a two-term president. He's been very constructive on that stuff. And, seems to be striking the right balance too on, working with, and so to clarify, we don't have any indigenous groups around Cangrejos, but on the eastern side of the country, there are a lot of indigenous groups, and he's helping to kind of work on standardizing the consultation process with those communities before projects are advanced, and making sure that everyone's getting input, and those things are all very, very important for mine development processes that can take 5 to 10 years, right? But you want to get the communities involved early. So he's been very good on all those fronts.
Great. And kind of to close it off, I think that's all questions, but just to close it off, in review, what news would we expect to look forward to from the company in the coming weeks and months?
Sure. So, we're getting assays, every week right now, and we'll continue to kind of batch, call it, 10 holes together every time there's a sensible amount to put together and get those out to the market. So it's really going to be drilling results through September. And then probably one press release on updated metallurgical results to see what that looks like, if we can enhance those at all. And then the PFS early next year. So that's kind of what the next 9 months looks like.
Okay, great. And actually, we did have one question come in that kind of follows up on that, but how long will the current treasury carry your activities?
Yeah, the plan is through the drilling, and then we probably have to come back to the market there. For those of you who follow the company closely, we went out in October to try to raise 26. We raised 20, and that was to get through the PFS originally. So obviously, to the extent there's extra drilling at Grand Bestia or things of that nature, we'll come back to the market later this year. But not expecting it to be a large raise in the quantum of the company's market cap.
Great. Well, thank you again, Scott Hicks from Lumina Gold, for presenting today. And thank you, everyone out there, for tuning in. And just a reminder that Red Cloud Securities will be back tomorrow afternoon when our webinar series continues with World Copper presenting Wednesday, April 20th at 2 p.m. Eastern Time. Have a great rest of your day.
Thanks, Tim. Thanks, everybody.